Hi, Steve McNulty with Premier Lending. A couple of months ago, I had a transaction that was a purchase, and it came to me because the previous mortgage company was not able to actually close the loan for the client. So here's the scenario. I had a client who was already under contract. They were supposed to close in less than a week, and he came to me and said that the bank that he was going through was not going to be able to close the loan, and that they had some issues. So, the first thing I did was I got the information for his real estate agent. I reached out to the real estate agent, let her know that we were going to need an extension. We were not going to be able to close the loan in under a week. After I got all the information from the client and was able to determine where he was at, we moved forward on the transaction for him and came up with the strategy. Now, along the way, because of his employment and the length of it and the way that he was paid, we actually had to make some alterations to his loan in order for it to work. So originally he was going to come in with his own money down. Unfortunately, because we couldn't count a kind of significant portion of his income, just because of the way he was being paid, we had to change that. So what we ended up doing was he had a car or a vehicle, I should say, and it turns out that he actually purchased this vehicle. He was the signer on it, but one of his friends was actually making the payments. So we try to see if we could get the stubs from the friend showing that he's been making the statements for at least 12 months. While we were able to, the way in which they're making the payments, which was a money order, it's not trackable, and it's not something we can actually use to verify. So we couldn't go with that option. So what we ended up doing was this client actually qualified for the Washington State Housing Finance Commission down payment assistance program. So we actually switched it over to that program, used the money he was going to use for his down payment, and use that to pay off the vehicle. And then we were able to use the down payment assistance to actually use the down payment on the home. The client actually came out of pocket with a couple of $1,000s less than he would have if we didn't go with this route. And he was able to move into the home after we got the extension. And he got a great deal on the home. He actually got it for quite a bit under what the market value was for it. So long story short, this client actually was able to get the home that they wanted. They paid less for it. We came up with a creative solution, not only to have him come in with less out of pocket, but the sellers actually ended up covering some of the closing costs because of the way we structured it. And he was able to pay off that vehicle. So now the client is in a home, and they have some place where his new daughter can call home, and he's super happy, and we were happy to help him. So moral of the story is, just because one lender isn't able to get it done for you doesn't mean that through looking through the transaction and thinking of creative ways to help the client, that the deal can't get done. So if you are in a situation, or your clients are in a situation that the other lender couldn't do it, seek a second opinion, see if somebody else might be able to come up with a solution for their needs. Hope everybody's having a great day, and I'll talk to you later.